Hi, thanks so much for joining in. You're watching Ask BQ on BQ Prime. My name is Alex Matthew, and this show, as the name suggests, gets you answers to all of the stock-related queries that you might have. As I look at the screen, and that's exactly what I was doing just now, the benchmark Nifty 50 is just down about 0.1% or thereabouts, and trading below that 19,400 mark. And this is more or less in line with what you're seeing across the board in the international markets as well. Just a bit of a cooling off from what was quite a positive start to the trading week. In fact, you saw yesterday as well, the benchmark index gained quite significantly to end above 19,400. Let me get my guests on for the day. We've got Sameer Dalal of Natverlal and Sons Stockbrokers, and we've also got Osho Krishan, who's a senior research analyst, technical and derivatives at Angel One. Thank you so much, gentlemen, for taking the time. I will start with you, Osho, just on a quick check on the benchmarks and on the levels to watch right now, and whether or not you also agree with what seems to be the consensus, which is this is a buy on dips and sell on rally kind of a market right now. What are the key levels that you're watching out for right now?
Good morning, Alex. First of all, thank you for having me at your show. Well, looking at the overall sentiments or overall trend that we have seen from the previous 4 to 5 trading sessions, Nifty has undoubtedly been on the uptrend, but looking at the overall strength in the upper rally, then it is not very much convincing, because looking at the candlestick formation from the past 4 trading sessions, it has been forming a kind of a doji pattern on each day. So that means on the higher levels, conviction for buying in the market still lacks at current levels. Looking at the overall sentiments or overall trend, market still is on the lower downtrends, because we can clearly see that the trend is having a lower lows, lower highs kind of a formation on daily time frame. So as of now, for the time being, 19,000 and 19,100 level should be acting as a very strong support zone, while on the higher end, 19,400 to 500, this is a very strong resistance for Nifty in the coming period. Until we surpass 19,500 on a very decisive note, there can be some kind of uncertainty that can be seen in our market, and one should try to have a nibble-footed approach in these current conditions and should look for stock-specific approach at current time period.
Okay, speaking of stock-specific approach, let's talk, gentlemen, about the stock that we decided to focus on today, and that is Bajaj Finance. On the back of its plan to raise funds, the QIP opened yesterday. And Sameer, we were discussing it in the newsroom this morning. We were talking about the fact that, and it was put in a very simple term, which is that they're trying to raise the ceiling so that they have room to grow, because raising more equity allows them to essentially take on more debt and increase the book. And they've been growing at what, 30%. So what did you read from all of the numbers that we've discussed? And in the temporary or short term, there's going to be a kind of a dilution. What kind of impact do you see that having?
So I think this has been known for quite some time, right? The stock has come off from about 8,500. I think it had gone up to about the 7,500 odd levels once the news of the 10,000 crore issue came up. So there's nothing new. Now, the dilution in equity has to happen in any of these finance companies, because like you very rightfully said, for them to be able to grow, they need to be able to lend more money. And to lend more money, they need to have enough capital adequacy, which allows them to borrow money. So it's in line with what we expect NBFCs to do, given that these are the requirements from the RBI about particular capital adequacy that is required. Now, probably it's come 1 year earlier than what everyone in the market was expecting, because I don't think they were that starved of capital. So they've probably bit the bullet ahead of market expectations. But the fact that they're getting such premium valuations, which is allowing them to increase their book value by about 10% plus, why not take the opportunity? You never know what could go wrong in the next 1 year, right? You still have interest rates which are higher than what the markets like. You still have the uncertainty around the two wars. Of course, Ukraine, nobody's talking about, but the Israel-Hamas issue is still there. But you don't know how those could play out, and if those could have some negative impact in the next 6 months, 1 year. And if interest rates remain higher, because, the US has actually been quite, as much as we may want to say no, but the US has been quite resilient when it comes to the economy. They've still grown at 4%, even with interest rates at 4.5%, 5%, right? Which tells you that inflation is still a little bit on the higher side, sticky side, and which means we could have rates for higher rates for longer, or maybe even a 25 basis points rate hike when something suddenly changes. So why not take this opportunity to dilute? So I think Bajaj Finance has done nothing wrong in that sense, probably going a little early. They're getting a good price. Now, what, like you rightfully said, is this will allow them to keep growing aggressively for the next 2 to 3 years without having to dilute any further capital. We also know that there's a lot of talk of Jio coming in and trying to capture some amount of market share. We know the other NBFCs also, banks are all focusing on the retail side because corporate has not been as conducive. So if you have decent capital, low cost borrowing, again, this is to some extent, I won't say free money, but there's no cost of money on this, right? The equity side. So that helps the earnings quite a bit. If you can even generate a 15-16% on your own money without having to pay any interest, that's great for earnings profile. And then if you can lever it up even 1 or 2 times, you can probably push your returns up higher to 21-22%. So on all angles, it's good. I think there's nothing wrong. Bajaj Finance will benefit from it. Where we find the slight difficulty with Bajaj Finance, and we've always found it, I guess, to some extent, is the valuation discomfort. It's for the last probably 8 or 9 years traded at valuations which we find difficult to accept. But the fact remains that these valuations have sustained. So given that, any correction that happens in the stock closer to price to book of 4.5, 5, throughout buying opportunities, because we believe that they may continue to remain at that. They may come off from the 8, 9 that they're going at right now, but 4.5, 5, and then you can play the growth story in that. So corrections is where we like Bajaj Finance. It's a good move that they're raising the capital, no doubt about it.
All right, so let's talk about the potential or the probability of those corrections playing out. Osho, how do the charts look for Bajaj Finance, and what are the technical indicators point?
See, overall, Bajaj Finance have seen a very strong breakout from the zone of 7,300 levels on the monthly chart. And as of now, the stock has corrected from the zone of 8,100 towards the same 7,400, 7,350 odd levels. So that means it has retested the neckline of breakout, which gives us the opportunity to re-enter in the counter for a higher target. Because if we will be looking on the broader time perspective, then it is a very strong chart formation breakout that can be seen on a monthly chart and weekly chart. That means we are talking about a larger picture for Bajaj Finance. And once there has been retesting the same levels or the necklines on these time frames, that means this is a very strong opportunity for long-term investors to invest in this counter for a very strong upside target. For now, immediate basis, the target comes around 8,200, followed by 85 to 8,600 from medium to long-term perspective.
All right. I hope I'm reading this question correctly, and we've got a few questions already. I'd like to remind all our viewers that are tuning in on the various social media platforms that you can send your questions to us on any of those chats. In fact, on the YouTube chat, and on the WhatsApp number as well, that should be flashing on your screen intermittently. The first question that I'm taking is from Chidanand, and it's on IRCTC. I believe he's got a call at a strike of 690, and he's got this at a level of 10.44. He's got 2 lots. What should his strategy currently be, Osho?
See, overall, IRCTC has seen a very strong rebound in the previous 2 days. So from here onwards, we are expecting that from here onwards, there can be a uptick rally towards the zone of 688 to 690 on spot levels. So as of now, if we have taken the position of 690 call option, currently it is hovering near the zone of 14 to 14.5. So better to trail a stop loss of 12 rupees, because if there will be, today we have seen a very strong movement in IRCTC, approximately 1.5% up, which is a very strong technical development for this counter. But on the higher end, we are expecting another 1 to 1.2% kind of a rally in the coming follow-up day. So therefore, one can strictly trail their profits around 12 levels for the immediate upside of on options from 17 to 18 rupees.
Okay. Very quick view on the fundamentals, though it's not been sought. Samir, what's the view on IRCTC?
So it's a great company, if you ask me, fundamentally, because it's a one-of-a-kind of business. look, at the end of the day, the ticketing services revenue is only going to keep increasing when it comes to IRCTC. The revenue side that is going to come from the food and catering side will also start seeing an uptick, which will lead to operating leverage. The cost structure to a large extent is already in place. So it's a great business to be invested in for the longer term. Again, where bit of discomfort is again on the valuation front, it's trading quite expensive. Corrections are great time to buy. If you have a 3-year view, I think there is money to be made, but it is going to be taking a lot of time to make any significant return because, like I said, valuations are expensive and the growth trajectory is not going to be as quick as we think. It's going to take time for the numbers to trickle through and give some upside for an investor at this point.
Sure. I think you're going to have to say that same thing for quite a few stocks, Samir, at this juncture, even though we've seen a bit of a correction from the top.
So, Alex, which is why we feel that markets are due for a correction. And, the beginning of the correction did come through. And if we were on your show, I mean, not your show, but another show of your channel. And we said that we believe the index should make its way down to 18,000 levels where maybe we would get some valuation comfort. So from a fundamental angle, it becomes very difficult to give long-term buy calls when you're paying top dollar for every single stock when there is uncertainty in the world.
No, very certain, very certain. We've got Amit Upadhyay who's asking about a shorter-term view on FMCG counters, and this is after Diwali for the short term. So I guess we could talk about the fundamental impact of Diwali and the festive season. But first, let's talk about the technicals and what you're seeing on the charts for the next couple of months, I would think. Osho, FMCG pack.
See, overall, FMCG have not been performing very well in the recent period. Talking overall about the indices, then indices has been hovering or consolidating in a very narrow zone. If I'll be talking about the heavyweights like HUL, ITC, then major of the companies are due to have a very strong up move. Majority of the companies are near the 200-day SMA on the technical charts also. But looking at the overall longer term perspective, undoubtedly there can be a strong uptick that can be seen in all the FMCG counters because as of now, the FMCG index is consolidating and the narrow is getting and the zone is getting narrower day by day. So from here onwards, one can expect an outburst, and coming with the festivities that we have just at the end of the week. So from here onwards, one can expect consumer durables to have a very strong performance, and eventually all the FMCG companies will be having some kind of significant movement in the price charts also.
Which would you pick though from the pack? Would you have any specific buys on any of the FMCG or the consumer goods counters, and what levels would you point to?
See, overall, there are many counters, but looking at the current levels, Godrej consumer products is looking very positive as of now. Recently, that means in this week, starting of the week only, it has seen a sloping trend line breakout. That means it is having a very strong formation, reversal kind of a formation that can be seen, and it has taken place at the 200-day SMA. So that means the support is very nearby on technical levels. 970 to 980 is the zone where one can expect a very strong demand zone for this counter, while on the higher end, one can expect 1060 to 1080 in the short-term time frame. So overall, Godrej CP is looking very positive, and one should try to accumulate this counter even at current levels.
I mean, anything to add on FMCG? I think by and large, this pack has never provided valuation comfort. Most of the frontline companies have always been considered a little bit pricey. But do you see any opportunities in the near term?
Yeah, so there is a company that we are quite positive on at this point is Zydus Wellness. This is a company that is making products like Complan, Neutralite. You have Glucon-D, one of the other products, Nycil powder. So they have a bit of products which are FMCG facing. Of course, there is cyclicality to some of their business because a couple of their products are summer heavy businesses. So in fact, if you see the quarter results just came out, I think yesterday, and you see on a quarterly basis, there was a sales decline. But what you look at it is the kind of differentiation of product that they're doing with the Neutralite, healthier option. I think that in India is still at a very, very nascent stage and has a huge potential to grow as health awareness keeps increasing within the country. So that will lead to operating leverage. They have good gross margins. EBITDA margins are half decent, which can move up. Of course, they've compressed a bit, but they can move up as raw material prices come off. We believe there's valuation comfort to some extent there compared to the FMCG. It's relative, I'm not going to say on an absolute basis valuations are cheap, but relative to the rest of the industry, they're quite attractive. So that is one of them. The other one in the large cap space is ITC, that we still think has some valuation comfort compared, again, relative basis. If you look at its historical valuations, yes, the stock has doubled, but when you compare it to the likes of HUL or some of the other larger Nestle or P&G, I think the valuation comfort still exists in that. So that is still something I would look at maybe making an investment in from a two-year kind of point of view.
Okay, we have another couple of minutes, and this is specifically a fundamental question I'm coming to you on, Samir, and this is on Moldtech as well as Action Construction Equipment. Both of these are being considered by Muiz, who has written in, and he's looking for the long term and wondering whether a SIP approach is something that he can consider for these two counters.
So we don't have coverage on Ace Constructions. Moldtech Packaging is the one we do have coverage. I hope there are two of the Moldtechs listed. I hope he's talking about Moldtech Packaging.
No, so, Moldtech Technology.
No, I'm sorry. That one also we don't have. We have coverage on Moldtech Packaging.
So why don't you tell us about Moldtech Packaging then?
So I'm actually quite positive on Moldtech Packaging. Yes, valuations are again discomfort, but I'll tell you why I'm kind of positive on this. He's making these plastic container products which are just beginning to make its way into the FMCG space. So he's been very predominantly catering towards the paint industry. Of course, the paint industry does well, but as he enters the packaging for FMCG products, and he's differentiated his packaging in the fact that it's not a stick-on. You don't stick it onto the plastic packaging, but the plastic packaging comes with the design inbuilt within it. It's like it's a specialized thing. Now, as that sees more traction and as more FMCG players start expanding in that kind of space, I think the growth opportunity for a Moldtech Packaging is great. So we believe the next 2 to 3 years, you will see some new additions to their customer base, which will lead to great operating leverage. He's also making the machines that go into making all of these products. So from that part of the business also, he will continue to do very well. So we are quite positive on Moldtech Packaging. We believe the long term is good. Again, 2 to 3 years, I think there's good opportunity and great leverage to make money in that. Don't have coverage on the other.
I have to wrap, but I will ask you to give me a very quick answer on this one, since we've got Amit Rastogi asking this. KEI Industries versus Polycab versus RR Cable. Do you have a view on any of these on the fundamentals, Samir?
Yes. So RR Cable, Polycab, of course, we cover, but again, it's run up way too far ahead of its fundamental justification, I believe. Valuation discomfort, great growth, great company, great growth. Management is good, but I would stay away from the valuation. RR Cable is a newly listed company. Again, valuation is not cheap, but much cheaper comparatively. Plus, they have a good amount of export opportunity, which they're catering to, which we believe will continue to grow quite well. Corrections in RR Cable are a buying opportunity. For Polycab, we would buy, but we want at least a 10 to 20% correction in the stock before we buy.
Okay. Gentlemen, I'm completely out of time, and hopefully I've gotten as many questions as possible answered today. Osho as well as Samir, thank you so much for joining in. Viewers will be back tomorrow at the same time, 11:30. So keep your questions ready, and we'll be back to take all of them. Thanks so much for tuning in. This is BQ Prime.
Thank you very much. Thanks, Alex.
I take this opportunity to wish BQ Prime team as well as the audience a very happy and a prosperous Diwali and a great year ahead in terms of investments.